This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for gains as oil and treasury yields fall on signs of progress reopening the Strait of Hormuz. U.S. chip makers halting a 7-day losing streak ahead of Nvidia's results. China warns its relations with Iran will not be disrupted as the U.S. threatens sanctions on dozens of entities in the mainland and Hong Kong. Plus, how AI could revolutionize drug development. We're live at a tech summit in Hong Kong with the founder of pharma startup MindRank.
And I'm Heidi, Stroud-Watts in Sydney. Let's get you straight to the setup for trading across Asia this Wednesday as we hit that midweek session. The focus intensifying when it comes to these Nvidia numbers. Earnings coming through, those expectations are being built, particularly in light of what we've been contending with some of these reported price hikes as well. But elsewhere, as Shery mentioned, we did see that sort of nice boost from the easing of oil prices. The Nasdaq 100 up by 0.6%. We're seeing Nvidia, some of those other tech names in a pretty good position ahead of a busy second half of the week. Chicago Nikkei futures looking fairly flat at the moment, but we should see a pop as we get into the start of trading for Korea. Also watching some of these Apple suppliers as well, as we saw some new products being launched there through Apple. When it comes to the oil part of the story, we are seeing Brent crude holding some of those sustained losses there, with New York traded crude down by over 1.5%, extending these declines as we see Iran and Oman pushing these talks to reopen the Strait of Hormuz. And now we're talking about this idea of a interim framework to resume shipping volumes. And of course, we continue to watch treasuries, given sort of the lack of signalling or further moves as Treasury is gaining with still very much the pressure and concerns facing Treasury Secretary Scott Bessent.
Heidi, let's get more on the market outlook with Bloomberg and Live strategist Mark Cranfield. Mark, I mean, Heidi just mentioned all of these variables that seem to be sustaining the relief rally, whether it's lower oil leading to perhaps the rates expectations and the pressure subsiding. But at the same time, we have super high expectations when it comes to Nvidia. So how healthy is this setup for sustained gains?
I don't think many investors will be reading too much into what's been going on the past couple of days. It looks very much like trading within the ranges that they've been used to ahead of major events coming up. And there are just so many on the calendar, as you say, starting with Nvidia. There's Jackson Hole. We've got major bond auctions next week. There's likely to be more developments between the US and discussions over Hormuz as well. So there are plenty of reasons for investors just to trade the range slightly. There's a big report today that the Treasury market has done pretty well at the long end, 30-year, since Bessent started with these words about trying to do buybacks. And yet really it's just a question of discipline from bond traders. They're reducing some of their risk on spread trades between swaps and treasuries, and that's quite understandable given that there's been some headlines on oil prices are lower. So if you step back and you look at the price action that we've seen in the past few days, the only thing that really stands out is that Bitcoin and gold are having a really strong week and they're outperforming most things. But otherwise, bonds, equities, everything is pretty much trading within the range. Even oil prices are trading within a well-established range. So there's nothing too much that's going to change the medium-term opinion of global investors here, particularly in the macro space. There will be now waiting for Kevin Walsh to give more guidance or not, which is quite possible. He doesn't like giving much in the terms of openings to markets to read into what he has to say. They want to wait until the September FOMC meeting. So we can expect some pretty choppy trading ahead, and Nvidia is going to be the next big thing to drop on markets. There's a big chips conference going on at the moment. I'm sure Anthony will tell you more about that later, but that has certainly given a little bit of a boost for some of the tech names. You can see the SOX had its first day higher in 3 sessions. So some modest gains here, but within the context of trading ranges.
That longer term kind of fundamental concern about what happens to the Treasuries market and cost of longer term debt financing is still going to be front and center, right? It's interesting. We heard from Stanley Druckenmiller, who apparently is a former mentor of Scott Bessent, saying that the intervention was a mistake. Does that mean the dollar debasement trade is likely to continue?
It's hard to see that not happening, and the fact that Bitcoin and oil, other cryptocurrencies, are having a pretty good week. That's a sign that investors are not too sure where the US dollar is going. They don't have full confidence in it. And some of it is outside of Bessent's hands. We have one story on Bloomberg today saying that the JGB market could be a reason why they're so keen to try and cap long-term treasury yields, because they can't control the Japanese market, and yields are certainly pushing higher next week. We have two auctions, 10 years and 30-year auctions in the Japanese market. Yields are edging back towards the highest in this cycle. Traders will be looking to price in a concession. The Bank of Japan now is under pressure to raise interest rates in September, but it's very rare for them to do back-to-back hikes. So October, if they go in September, that means October is probably off the table. That's not good enough in terms of the discrepancy between yields and inflation in Japan, and the result is likely to mean weaker JGBs next week. If we get a weaker market in Japan, that will feed through back into treasuries. And now that treasury traders have reduced positions at the long end of the curve, that just gives them a better opening to get back in if there's turbulence in other markets, whether it's in Japan or Germany or somewhere else. And French yields, of course, are under some pressure. So it's a global impact here that we're seeing in bond markets. Just because we've had a bit of calm in the past couple of days doesn't mean to say that next week will be the same story.
Bloomberg MLive strategist Mark Cranfield there in Singapore, and the foreign ministers from Iran and Oman have discussed what they call an interim framework aimed at resuming shipping through the Strait of Hormuz. Let's bring out Bloomberg editor Michael Heath, who joins us now. The stalemate seems sort of pretty intractable at this point. So is this a case of finding sort of a short-term workaround?
It seems that way, Heidi. I mean, as you mentioned, they're talking about an interim framework, and they're sort of technical talks, and the idea being to get a channel that they can move shipping through, which includes removing mines, which is not a simple thing to do as well. And they expect to have more talks on this as well. So it seems like sort of almost a case of working with what's available at this point, and perhaps providing another opening to for talks, depending on where this goes. I mean, at this stage, it's only the two of them talking, but in their various statements that came out, both sides sort of referred to having other states that are on the Persian Gulf, becoming a part of this. Now, whether if it gets open, can Iran actually even move oil because it's blockaded obviously by the US? Can Western countries get oil through, etc.? I mean, there's so many unknown questions, but the idea of trying to get it open and getting shipping moving again, I guess, is it's a step in the right direction.
I guess maybe the more interesting thing is what's going on with this economic pressure campaign on Iran, ostensibly on Iran, but we know that it's going to be really on Beijing in terms of what's coming from the US. We've heard the defiance from China already, because we know that they don't like their sovereign interests, even the idea of it being controlled by another nation. But it's also really interesting that we're seeing the CIA director fly into Russia at the moment. You do have to wonder if the issue of Iran might be coming up in those conversations as well.
Yeah, I mean, look, there's just zero information on the report on the CIA director, but obviously Moscow, is an interlocutor in terms of when it comes to Iran or China or all these sort of areas as well. And you suspect that anything that's going on there is that Russia would want something to do with Ukraine, US would want something to do with Iran, potentially. It's pure speculation here. As to the economic campaign, you're totally right. I mean, the reason this hasn't happened before is because it means engaging with China, and even the way they've sort of approach this is that it looks like they're trying to sort of throw out what they want and see if China will give them something at least, rather than get to a stage where they go to confrontation again, because Beijing has shown it's very good at this. It does have weapons to hurt the US in terms of trade, and the US is certainly aware of that, and the economic disruption is great enough that the idea of expanding that, I think, is not something anyone would want. So it's sort of, it almost seems like a throw of the dice to see what they could get out of China there. We also have next week a meeting with of the Shanghai Cooperation Organisation, which will bring together Russia and Iran and China. Now, whether Iran and China talk there, that could be the case as well. But really, just waiting to see what comes at this point.
Bloomberg editor Michael Heath there. And we're also following tariff tensions. Canada has announced new tariffs on U.S. steel, aluminum, and electronics, along with support for businesses affected by the trade war with Washington. Provincial leaders say the conflict now goes beyond trade and touches on Canadian sovereignty.
There comes a point where there's just a refusal to recognize the sovereignty and the independence of a country that you're dealing with that moves beyond global strategy to merely being insulting. We have coordinated trade strategy with the United States for generations. The president surely knows that. But the idea that he could dictate unilaterally with the threat of tariffs who we trade with and who we don't is a step too far.
I told the Prime Minister, no deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's #1 customer. And it just doesn't make sense to attack each other.
Let's cross to Vancouver and Bloomberg News Bureau Chief Thomas Seal there. Thomas, this seems like a sharp reversal from Canada, especially after strategically removing some of those retaliatory duties earlier. What exactly happened?
Hi there. Yeah, I think you can look at this as Canada has tried both tactics. It's tried to play nasty under Justin Trudeau. It imposed counter tariffs going back to March 2025. Trudeau stepped down. Mark Carney won the election. He tried a reset. Let's be conciliatory. He removed many of those counter tariffs, as you just mentioned. He's also made some other concessions. He removed a digital services tax, which was irritating Trump. And that doesn't appear to have worked. It resulted in America asking for more concessions and ultimately imposing these Section 338 tariffs, these new tariffs. They were unable to reach a deal. And so we've seen Mark Carney ultimately, in a way, return to that original strategy of counter tariffs, which very few trading nations, in fact, only really China, have resorted to.
The counter tariffs right now seem to be around $20 billion of U.S. exports. How consequential will this also be for Canada?
Yes, Carney made the point in his speech on Saturday that this is a step that he's taking reluctantly because it just impedes trade between these two countries. And this is an absolutely enormous trading relationship. It's something like $900 billion a year trading relationship. And so he's trying to pick targets which minimize the impact on Canadians. So these are things where Canadians can probably find domestic alternatives, they were saying today, Canadian officials, things like lobster and salmon, for instance. US lobster and salmon faces higher duties. So instead of buying some from Maine, you might buy some from British Columbia or New Brunswick or Nova Scotia.
What are actual business leaders right now in Canada saying about this, and what's the potential of a breakthrough going forward here with the U.S.?
Business leaders are, I would say, muted. This is not good for business, to put it obviously. But at the same time, I think many business representatives see that this is necessary to push for a better settlement. Some of the tariffs that were being insisted on by the US would have been quite existential for some Canadian businesses. Even though relief on tariffs was part of these discussions, they were still going to have greater tariffs than before Donald Trump came into office. And not only that, they would have had to effectively sign them into some kind of international agreement. And Canada has maintained that these tariffs are illegal. So that would have been a backward step for some people. And in terms of a breakthrough, I would say nothing imminent. Sorry.
Watch the space, though. Thomas Seal, who's Bloomberg's Vancouver bureau chief, there with us with the latest. Still to come, Anthropic reportedly set to tell investors its potential revenue opportunities could exceed $30 trillion, topping even SpaceX's estimates. We get the details next. Plus, speaking exclusively with the BNY Executive Vice Chair, Hani, Kablawi, about their Asia strategy and why they see AI as a superpower for the company, its staff and clients. This is Bloomberg.
This week, Bloomberg is live at the Jackson Hole Economic Symposium. Tom Keene and Lisa Abramowitz, along with Michael McKee, will bring you news and interviews with Fed leaders, policymakers, and economists shaping global monetary policy. Tune in for continuing coverage and a special episode of Surveillance, August 28th at 9 a.m., including full coverage of Kevin Warsh's first speech to the conference. The Jackson Hole Economic Symposium on Bloomberg. Context changes everything.
Take a look at how we're looking when it comes to the Nasdaq 100 futures. We are actually seeing it steady after it outperformed in the overnight session. Of course, we had the big macros like oil falling, not to mention treasury yields also falling as well. At the same time, we have this rebound when it comes to the AI trade. We saw Nvidia actually gaining ground after a 7-day losing streak. It's still one of the biggest laggards when it comes to the Philadelphia Semiconductor Index. But of course, this will be the big major test when it comes to the AI trade. Now analysts expecting the quarterly revenue for Nvidia to nearly have doubled to a year-on-year gain of about $92 billion. And of course, big implications for the Kospi. Right now, futures looking to some upside after we saw some declines in the previous session. But it's really all about the AI universe, right? Anthropic now reportedly expected to tell investors its potential revenue opportunities exceed $30 trillion, topping SpaceX's estimate. According to the Wall Street Journal, the company is aiming to raise as much as $100 billion in its IPO and is aiming for a valuation of about $2 trillion. Bloomberg Markets reporter Anthony Stevens joins us with the latest. And Anthony, I mean, can Anthropic sell this idea? I guess not just Anthropic, but other companies, that you can actually talk about total addressable market assumptions without actually being there yet and have this euphoria around you.
Yeah, look, at the best of times, the total addressable market is an act of financial theater, right? And in this particular case, it is quite something. They are talking about the entire market that can be addressed by using AI. And this actually strikes to kind of a debate around Anthropic, right? Where is its revenue going to come from outside the software industry, where its use is pretty much, ubiquitous, right? So what are the other markets? And that is the context for this attempt at putting a number to that overall market. Now, also to put that into context, right, it's a significant multiplier over the entire revenue of the S&P 500 technology index over last year. It's a significant multiplier on that number and a pretty decent chunk ahead of SpaceX, which was also considered a very aggressive total addressable market, right? So they're clearly putting out their stall at completely dominating AI workflows using their software in terms of addressing that market. Now, how much of that is reality and how much of that is marketing will be left to the ECM bankers in the deal. But this continues the journey this stock is making, this company is making towards a huge listing and being a massive $1 to $2 trillion company when it does list.
Well, we still have to watch the actual numbers from actual earnings from Nvidia when it comes to this broader AI test in the sector, right? I mean, the fact that there's such high expectations always for this company, what are we expecting to see when it comes to the market reaction again, I guess?
Yeah, and it's become a significantly more complex company, right, as each quarter passes. So in the last 4 quarters, they beat on earnings. The stock has retraced for a variety of different reasons. And again, we have that dynamic coming into this earnings, right? We have Nvidia lending money to new AI data center build-outs. We have Nvidia launching new chips of their own, with the Grok chip headlining the Stanford Hot Chips Conference. We have competition from its own customers in terms of custom chips on the LPU and the TPU side. So there's a lot that the company needs to address in terms of the trends and the fight for compute and the build out for compute that is happening across the world. That's the guidance that the market will be looking to hear. On the margin side as well, the ability to pass on some of these cost increases on the likes of memory and other components will be very important, right? They're sitting on a 75% margin. How much of that is defensible going forward, especially as the competition continues to build out, and some of that competition is its own customers.
Yeah, exactly. Like we're hearing that OpenAI's new chip is outperforming Nvidia's in a way. So what are the risks related to that when you have your own customers trying to build their own silicon?
Yeah, and this speaks to this challenge around inference and maybe the move on from training the models, right? So inference relates to the fact that these companies need to maintain, these LLM companies need to maintain margin in continuing to use these models. And that is where the OpenAI model, the OpenAI chip is supposedly better, a reasonably well-named chip, the Jalapeno chip, right? It supposedly has a really good efficiency on the inference workloads. Now, that is an interesting challenge to NVIDIA's kind of dominance, because it speaks to each LLM provider or each cloud provider creating chips that suit itself and its like kind of primary goals more specifically than NVIDIA's kind of more general GPU offering. So that is an incredibly interesting challenge going forward for NVIDIA, and how they will address it in the earnings will be interesting. Now, for OpenAI as well, it's quite a good show of technical prowess that it can span both sides of the silicon divide. They can create the LLM and create the custom silicon, and this is an interesting new vertical for this company as well.
Marcus reporter Anthony Stevens there from Hong Kong. Let's get you caught up with some of the corporate headlines that we're following this hour. And OpenAI says Chris Malone, who's an executive helping oversee its data center build-out, has left the company. His exit adds to a series of executive shuffles and departures in recent months. Longtime executive Brad Lightcap has announced plans to leave for a new project, and the ChatGPT maker just named its second new chief revenue officer in less than a year. Bloomberg's been told that Alibaba co-founder Jack Ma has joined senior executives investing in the company's stock to show support for its AI ambitions. A source says Ma bought almost $77 million worth of shares in recent days. He joins the chairman, Joe Tsai, and CEO Eddie Wu, who have acquired at least $20 million of stock, according to exchange filings. Much more to come here on the Asia Trade. This is Bloomberg.
And the top global headlines that we're following: the White House says it will take as many as 200,000 visas away from foreigners in what it calls the largest mass revocation in U.S. history. The move is expected to target asylum seekers who hold visas, escalating President Trump's drive to cut the number of foreign citizens living in the U.S. Data show federal immigration agencies have a backlog of more than 3 million asylum cases. Indian technology companies may have become less reliant on high-skilled visas amid tighter restrictions under the Trump administration. IT industry groups NASSCOM says the employment under the H-1B visa program has fallen significantly as Indian companies expanded local hiring. On Monday, the U.S. proposed a new rule requiring firms to pay around $103,000 for most H-1B workers hired by private employers.
Let's get you a look at really what is ultimately the debasement, the dollar debasement trade, right, as we continue to watch moves in treasuries. Of course, not a lot of signaling that we got from Treasury Secretary Bessent in terms of what next in this strategy to manage the fiscal situation, these concerns, particularly when it comes to investors holding it for the longer, and the short squeeze that we've seen in US long bonds really kind of being showing us that the Bessent put has been putting in some work. But if you take a look at that trade, we are still seeing high trading when it comes to emerging markets FX. We are still seeing some gains, 4 days of gains now for gold, up by about 0.1%. These inflation concerns also easing a bit, and Bitcoin also continuing to put on some gains. More ahead here in the Asia Trade. This is Bloomberg.
We're setting up for gains across Asia at the open in about half an hour. But Heidi, of course, big test for the AI trade will be Nvidia results, especially after we had 7 days of losses. It's still a laggard when it comes to the Philadelphia Semiconductor Index, but expectations right now pretty high, and analysts thinking that we could see quarterly revenue nearly doubling to $92 billion, more than any of its rivals generate in a full year. But of course, the issue right now is that expectations are very, very high. Investors want that confidence confirmation that AI demand remains strong. Hyperscaler capital expenditure is not slowing. Margins are holding, et cetera, et cetera. So really right now the question will be, will Nvidia be able to deliver? And even if it delivers, will that satisfy investors? Right now we're seeing Kospi futures at the moment, though, gaining ground.
Yeah, take a look at what we're watching when it comes to these geopolitics kind of related trades. Of course, Iran is still in the spotlight as we continue to see the likes of Iran and Oman now talking about a potential workaround, essentially an interim framework to try and resume shipping volumes through the Strait of Hormuz. This as ultimately the sort of longer lasting peace situation remains at a standstill between the US and Iran. We are seeing some losses there when it comes to Brent crude, last traded lower by almost 4%. New York traded crude off by 1.5% there as well. Part of that, of course, is what we've been talking about as the dollar debasement trade with the gains across gold, the gains across Bitcoin, and the softness in the greenback as well. We are watching to see what Treasury Secretary Scott Bessent's next move is going to be as markets continue to contend with the Treasury twist, or the so-called Bessent put. We do have some breaking news just crossing the Bloomberg when it comes to the Future Fund. This is a sovereign wealth fund here in Australia. A change of leadership is expected. The Future Fund's head, Raphael, or Arndt, will leave his role to return to the private sector. This is just the latest move in what has been really a series of changes in the top ranks of the Future Fund. This is a $255 billion US fund that we're talking about. He's been in the role for about 6 years. He'll serve as the CEO until the end of this year. The board will be, in the meantime, looking for his replacement, according to this statement just out. He is the longest serving CEO in the 20-year history of the Future Fund, and really comes at a time where we do see the Future Fund operating and has been really analysing a lot of the AI opportunities they see across Australia more broadly. Well, our next guest also sees a lot of opportunity here in Australia, particularly when it comes to that AI thematic. He leads BNY's strategy, business and teams across the Middle East, Africa and Asia Pacific. BNY overseeing more than $60 trillion in assets, processing $2.5 trillion in payments daily. Joining us now exclusively is BNY Executive Vice Chair Hani. Kablawi, really great to have you with us. So tell us, why Australia? What are you doing here?
We've been here for over 50 years. I mean, you mentioned the future funds, superannuation funds continuing to accumulate at a really fast clip. If you add the 12% that is mandatory, plus the 8 to 12% in returns on average every year, the 4.4 trillion Aussie dollar will be something like 5.5 trillion equivalent US dollars within the next 7 years or so. It'll continue to grow from there. It's an important market. It will become the second largest pensions market in the world, surpassing the UK and Canada over the next 5 to 10 years. And there's a lot of innovation that happens here, and we're interested in both the innovation opportunity with the supers as they continue to push the envelope on developing their operating models and their investment platforms.
Yeah, it's interesting you talk about pushing the envelope, because I think increasingly with that enormous capital pile, the question has been how to most effectively put it to work.
Yeah, no, so, and you're right, because they're already larger than Australia's market cap and GDP, so they are looking overseas increasingly. And a lot of the themes that are coming out from our conversations are they're internalizing some of their investment management. How are they driving risk management frameworks to accommodate a new way of running their business and operating models? And also their liquidity platforms, their resiliency, operational and cyber and technology resiliency. So there's really a lot that we're talking to the supers about, and it really is a lot about the risk frameworks that they run.
In what ways do you find BNY able to support that investment cycle?
So it's both in the pre-trade and the post-trade investment flows. 80% of what we do is in the post-trade world. We do a lot in the pre-trade as well, so we manage, including for some of the largest sovereign funds and supers here, investments for them globally. But in the post-trade world, we run $50 trillion worth of data and analytics on behalf of funds all around the world, including here in Australia. So giving the supers the ability to view holistically their investment portfolios, whether it's internally or externally managed, total portfolio view, which is a trend that the supers have been trying to achieve, moving towards total portfolio recognition and the ability to drill down and understand at a granular level where their exposures are. Answer simple questions that are very difficult in practice, like, for example, what is my exposure to Nvidia? What is my exposure to the euro? What is my exposure to IBM, and so on and so forth.
I'm glad you brought up exposure to AI because it's sort of an existential question at the moment. And one point of view that I find quite fascinating is the one that it says that AI can be transformative. It is no doubt going to be transformative. It may be productive, but it may not be profitable for an investor. Is that something that sort of comes up in the thesis of how you approach the broader investing into AI?
I mean, our thesis on AI started very early, and we've been investing significantly, training all of our employees. 100% of our employees are on ELIZA, which is our multi-agentic model, agnostic platform. 60% of them are building agents, 60% of them are using AI daily. And it really was about not encouraging token use, but encouraging outcomes to make work more efficient. So to your point, Heidi, the main use case today is around operational efficiency. And in getting more operationally efficient, removing friction in market trades and in settlements and in giving clients better answers faster, it makes the entire industry more efficient when you process $63 trillion worth of assets under custody and administration. The opportunity going forward is in driving better, faster insights in order to help clients make better informed investment decisions faster than they would have previously. Marry that with digital assets, by the way, and then you can have your exposure to whatever it is that you need to get exposure to in the market much faster than you would have previously, and with much higher level of certainty of that exposure hitting your account when you need it.
Do you worry about some of the security issues that we've seen make headlines?
Yes, absolutely. Well, we get paid to worry about cybersecurity and operational resilience. If you look at our top risks, which go to the board on a quarterly basis, cybersecurity and operational resilience is always in the top 1, 2, or 3. And therefore, a lot of our capital plan and budget goes on investing in making sure that we're using AI to defend against those who are using AI to attack. And we do that at scale.
You look after the Middle East as well. What's been the impact from the US-Iran war? Have you made strategic staffing opportunistic decisions based on what's going on?
Yeah, we take a long-term view to any market that we're in. We've been here in Australia for 50 years. We've been in the Middle East for over 50 years. We're continuing to grow. So we're continuing to put people, resource, new capabilities into the region. I think that the big shift that we'll see in the region, and it does all depend on what is that long-term solution to the conflict that we're living through. But a likely outcome, maybe base case, if I can say, is that some of the net foreign assets that come out of the region could be coming back into the region, recycled back into the region by the big sovereign investors to invest in infrastructure, resiliency infrastructure, think food security, defense, transportation, energy infrastructure, data center security, and so on. There's going to be, if that happens, there's going to be a lot of infrastructure investment and spend in the region. And we are just as well placed at helping clients invest in their regions as we are investing abroad.
Does the lack of certainty in terms of what's going to happen make it difficult for you to make investing decisions? I
think you always take your base case, best case, worst case, and you attach your probabilities to them. We have a pretty good, strong conviction on the region long term, and we continue to invest.
Hani, really great to have you with us. Hani Kablawi, who's the Executive Vice Chair at BNY. Shery.
And Heidi, take a look at how we're setting up for the market opens in South Korea in about 20 minutes. We're seeing some upside when it comes to Kospi futures. Of course, we had seen gains in the previous session, barely maintaining those gains at the close. And we have seen those gains in the Philadelphia Semiconductor Index in the overnight session. So we could see that upside, especially as we head towards the Nvidia earnings results. Of course, that's the next test when it comes to the AI trade. What's been interesting is that we're seeing still a little bit downside pressure for SK Hynix, Samsung Electronics. Remember, these leverage ETFs tied to these two companies saw outflows almost $1 billion in the month of August. So still a lot of volatility to watch in this market. Coming up, Blackbird Ventures joins us exclusively to discuss investments in early-stage AI startups after a $750 million fundraising round, the largest for an Australian VC firm. More ahead. This is Bloomberg.
Well, Blackbird Ventures has closed its latest funding round, raising $750 million. It is the most ever for an Australian VC firm. Investors including the likes of Morgan Stanley, Adams Street and Australia's own Future Fund. Blackbird says it will invest the capital in early-stage startups, particularly with a focus on AI. And joining us exclusively now is Blackbird partner Samantha Wong. Samantha, really great to have you with us, and congratulations on the raise. Why was there so much enthusiasm? Because in some circles, Australia is sort of known as the anti-tech market, right? Is that an unfair misconception?
Yeah, I think what has been really awesome with this fundraise is seeing not only the local allocators who have backed us for a long time, but also these global allocators recognise that the Australian and New Zealand ecosystem is capable of producing these very large global companies. So within our portfolio, we have Canva, Airwallex, Halter, Massive Rising Star, PsiQuantum, Base 10 others, and exit them to global markets as well. That has been an important part of what drove the success of this fundraise, and also confidence from the global markets in our local ecosystem, being able to turn that into cash distributions, which we've done really successfully over the last 2 years.
So the next step, what are you focusing on? I know we talked a little bit about AI, which is obviously a very broad stroke at this point, particularly with the heightened scrutiny over what is actually invested and what's actually going to return profits. What sort of lens, I'm curious, are you looking at?
Yeah, so with our fund, our strategy is to go as early as possible. It's a large fund, but we really sweat finding those founders at idea stage, pre-product, and definitely pre-revenue is quite common these days as well. And so we're looking for things that will be potentially enormous 5 to 10 years from now. Within AI, we're sort of a little bit cautious, I would say, around the AI for X profession categories, and are looking further up the stack, right into the chip layer. A good example of that is a portfolio company of ours called Sienta, which is working on high bandwidth memory interconnects between chips, which is going to be really, really critical to the AI build out. And so we love those infrastructure layers, but equally, I would say we're spending as much time outside of AI or adjacent to AI, industries that are going to be beneficiaries of the AI technologies that get built. So that includes within healthcare and biotech, robotics and in industrial applications, and also agentic commerce. So this might be the moment for stablecoins or blockchain-based payments to become mainstream. So there are some of the areas that we're spending our time, but we'll be guided by founders. The outlier founders from Australia and New Zealand is what we're really all about.
Yeah, and I am sort of interested in how you go about finding these founders, if you will, and determining kind of, the assessment of potential, right? Because this stat actually really impressed me. Since 2000, Australia's produced 1.22 unicorns for every $1 billion invested. This is actually the highest ratio globally. So this kind of idea that, it's a bit player or an anti-tech, that we only have, miners and non-tech firms dominating, is a bit of a, misconception, right? So is it about sort of having more government support or funding to be able to get a little bit more of a higher profile view on this?
Well, so, given the success of the ecosystem, we actually think, there's so much reason to be optimistic. But in terms of, what we look for and how we find them, as everybody knows, Australia and New Zealand is a population of 35 million people, and a very small percentage of those will go on to be founders. But we're a very young and diverse population. Successive waves of migration and strong university systems mean we produce founders with quite unique experiences and the ability to design products and distribute, so design go-to-market for the whole world from the beginning. Obviously Atlassian and Canva really pioneered that, right? You plug in your credit card and you have a software subscription. You're not relying on a salesperson to come and take you out to lunch and so on. And they really pioneered that go-to-market motion, as well as international products, so multilingual, localized products very early. But now we're seeing successive waves of founders do that. Airwallex would be a great example. But within healthcare, for example, we have a portfolio company, Haidi Health. If you go to a GP these days, most likely your consult is being powered with the AI that Haidi has built. And that's a sort of 3-4-year-old business, but they have worked out how to design a product for all different sorts of payer systems, insurer systems, regulatory frameworks for 110 countries from the very beginning, and localize that in different languages for all of those markets, as well as learn how to sell them to 110 countries. That's very different to if you're a US-based VC. That market is so enormous. You can just focus on nailing the US market and conquering that. But it turns out that if you can build a company for the rest of the world from the very beginning, that's also a very big market. And as the eucalyptus exit that we did earlier this year to Hims and Hers, a $1.2 billion exit to a NASDAQ-listed company, to merge this Australian-born rest of world leader with the US leader, it makes for a very attractive M&A target, but also standalone business. And I think the global allocators with this fundraise have really sort of started to understand that narrative. You don't have to just be in the US or China. There are these global businesses being born outside of those two places.
It's interesting when you talk about the impact of waves of immigration, right? I do wonder, how do you compare the founder mindset in terms of the cultural system, the social system, the funding ecosystem that exists here compared to the US? Do you think changes would help encourage more of that pipeline?
I honestly think the thing that makes a difference is seeing others go before you and succeed. Like, what a difference it made to see Mike and Scott from Atlassian list, and then Mel and Cliff from Canva, and then now Jack Zhang from Airwallex and Lucy succeed on the global stage. That is what is really inspiring to the next generation of founders. And I would say the second thing is every time you have a company scale to thousands of employees, some of those employees want to go out and start a company themselves. They've learned how to build companies in this really unique way. They're ambitious. They want to do better than who came before them. And that's why I think there's never been a more exciting time to be investing in venture in Australia and New Zealand.
Samantha, really great to have you with us. Samantha Wong, who's a partner at Blackbird Ventures. We do have much more ahead here on the Asia Trade. This is Bloomberg.
We're 8 minutes away from the market opens in Japan after a session of gains that we saw in the previous session. You can see Nikkei futures pointing to some downside and the Japanese yen still holding at that 159 level. What we really care about right now is JGBs, because we saw that huge sell-off in JGBs. Of course, we do have still the September Bank of Japan potential rate hike priced in, but at the same time concerns about fiscal pressure. And we do have upcoming 10-year and 30-year JGB auctions in the next week. We're also watching car makers. Honda now considering a new U.S. factory as it prepares to roll out 15 new hybrid models in North America by 2030. The car maker says tariffs are among the factors in its push to build more vehicles closer to customers. Senior editor Reed Stevenson joins us now for more on this. And Reed, we have seen from many car makers around the world this localization factor, right? will Honda go ahead with this push into U.S.?
It looks like it's going to, essentially build a new factory in the U.S. But the broader context here is like Honda, if you recall, went all in on EVs. They were going to go completely, their entire lineup was going to be completely electrified. They have now scaled back on that. They posted their biggest ever, actually their first ever loss just, a few months ago this year. And now the shift in strategy is toward gasoline hybrids. That's something they can deliver now. It's what American car buyers want. That's why Toyota is doing so well. And again, given the tariff issue, it only makes absolute sense to just build locally, especially those hybrids, to deliver to the customers who want them.
What's the outlook right now when it comes to the broader mix for Honda then, given this strategic pivot? Because we did see the first annual loss or so ever for this company recently, right?
Yeah. Essentially, it's kind of a retrenchment of sorts. That's the way I would describe it. The transition to EVs is going to take much longer than many people thought, at least for the incumbent Japanese as well as American automakers. And so really they're trying to kind of roll out those products that are going to, be profitable from day one. And hybrids are going to be the answer. Now, Honda already has had hybrids. It just wasn't a large sort of proportion of their lineup. They want to change that. They want to go to, at least 50%, which is where Toyota is at in the US market right now. And also introduce new hybrid models for like more powerful, bigger cars, for example.
Bloomberg News senior editor Reid Stevenson there. Let's take a look at some of the stocks to watch when trade opens in Australia in the next 6 minutes or so. And Domino's Pizza swung to a full-year net loss of 134 million Australian dollars. Revenue declined, same-store sales also weakened. Woolworths, though, reporting full-year profit that narrowly missed estimates amid continued pressure when it comes to household budgets. But its collectibles campaign featuring the Disney Ushies figurines helped food sales jump at the start of fiscal 2027. WiseTech has forecast higher revenue for the fiscal 2027 year after annual sales surged 79%. The software company citing its continued growth in its CargoWise logistics platform. And Lynas Rare Earths reported full-year profit below forecast. Investors looking for signs of sustained demand for rare earth materials outside of China. Shery.
And take a look at how we're setting up, Haidi, when it comes to the market opens in less than 5 minutes. Of course, oil playing a big part right now as we continue to see that downside. And that's really leading to renewed expectations of what happens when it comes to rate pressures, what happens to central banks moving forward. And of course, we're still watching the AI trade. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia trade. We're counting down to Asia's major market opens where we could see risk assets supported today, Heidi. Of course, we do have that diplomatic momentum around the Strait of Hormuz leading to lower oil prices. That's also leading to less rate pressures. But at the same time, of course, we do have the next test for the AI trade, Nvidia earnings.
And another test when it comes to geopolitics, right? Because we do have the US now putting that economic pressure campaign, not really just on Iran, but really through that on Beijing. We've seen that defiance coming from China. We also know that other parties may have to be involved here. So all of this kind of building a lot of uncertainty before what we know is a planned leadership summit in September between the US and Chinese presidents.
And of course, we can't forget that trade front as well, right? Whether it's U.S., China, or right now the tit for tat between Canada and the U.S. as well. But take a look at how we're opening in the Japanese session, because we had seen that gain in the Nikkei in the previous session. We're seeing a little bit of losses. The topics, though, are holding steady. A little bit of divergence. We continue to watch the Japanese yen holding at that 159 level against the U.S. dollar. We continue to see the downside pressure towards that 160 level. But really the focus right now on JGBs, because we had seen that massive sell-off. We could see perhaps a reversal, given that we saw that support coming from the treasury space, coming from European sovereign debt as well. A lot to do, of course, with not only the fact that we do have the BOJ rate hike potentially in September already priced in the markets, but the fiscal concerns really pressuring the JGB space. In fact, Bloomberg has learned that the finance ministry is actually going to request a record amount of $230 billion or so for debt servicing costs for their initial budget should request when it comes to Japan's broader government picture. Take a look also at how South Korea is opening, because we mentioned the AI trade. We're headed towards that Nvidia earnings results. Expectations for those earnings are very, very high. So do keep an eye on the reaction from the markets, because we could see a little bit of volatility in anything related to AI semiconductors. The cost is down 0.1%. And remember, Samsung Electronics, SK Hynix leverage ETFs tied to these two companies saw an outflow of almost $1 billion combined just for this month. So the volatility factor is still here. And not to mention, Heidi, that we do have the BOK rate decision this week on Thursday. The expectation is for a back-to-back hike for this central bank.
Yeah, the sort of long shadow of a long end of treasuries is very much still in play here, right? Particularly as we wait for more signalling and potentially more details from Treasury Secretary Bessent about what his next steps are. We've been hearing about this plan to at least double Treasury buybacks. That's provided some support to the market, but that lasting impact doesn't seem to be one that is being held as a view by market participants. Elevated inflation, worries about surging US government debt. These are the fundamental questions still at play here. Still, we have seen some gains across treasuries. That fall in crude prices has certainly helped, particularly when it comes to easing inflation concerns. And that's also driven gold higher as well. We're seeing Brent crude off by 1.7% at this point. Here in Australia coming online, this is an energy-heavy market, of course, but still up by 0.3%. Bit of a mixed bag when it comes to earnings, but certainly we are seeing optimism at the early stage of trading, Shery.
Yeah, let's get more on the outlook for the markets with Michael Strobaek. He's global CIO at Lombard Odier and joins us now from Singapore. Michael, great to have you with us. I mean, we are seeing perhaps a little bit of that relief coming into the equity space, given that lower oil continues, given that we are seeing perhaps less pressure on rates. What are your expectations for moving forward the rest of the week when we still have earnings from Nvidia hanging on the line?
Well, good morning. Our expectation is that equity markets still have a path of least resistance upwards. We've obviously seen some stress throughout the year from geopolitics, oil price, and standoffs between various players, but nevertheless, equities are solidly founded on strong earnings from the AI boom and players like Nvidia. So we're overweight equities, both in developed markets and emerging markets, and we believe that this economic cycle still has further to go, and that's why you need to be long equities.
Long equities, but what about the AI sector specifically, especially semiconductors, given that Nvidia's results are coming out?
Well, I've said all along, strategically, you cannot be short US tech or semis specifically for too long in any portfolio. We've obviously seen some major moves this year, but it looks as if sort of the semis and the superscalers are back in play. We've bought them back. We bought back US large cap after being a little bit underweight when they had this big rebound sort of in the middle of the Iran conflict. And we still believe that this is strongly driven by capex spending and an earnings cycle that is sort of feeding on itself, and therefore you need to be in this space still.
Michael, how about the geopolitical risk right now, especially given that, of course, when it comes to U.S.-China on the tech sector, the rivalry continues. At the same time, we have seen those sanctions around the Iran war when it comes to Chinese and Hong Kong entities.
Well, geopolitical risks have been with us for many, many years, but obviously have been accentuated by the return of Donald Trump to the White House, who has, for reasons that are still to be defined by the history book, decided just to start trade wars and actual wars with everyone. But markets, climb a wall of worry, and the geopolitical risk premium has really not been that great or big, except for the spikes when we saw sort of the tariff war starting and also the Iran war through oil. So the transmission mechanisms have been clear, but markets have looked through this and said, look, the parties have a mutual interest in trying to de-escalate, and that's what we're seeing with the oil price, and therefore we wouldn't overestimate it, but of course we can't sit on this forever, and the US government has realized this also because they need to go into a midterm election where they look very weak, and therefore they have a strong motive to de-escalate and see that oil prices, gas prices, diesel prices and so on in the US come down.
At least when it comes to the Trump administration itself and his lieutenants, for example, what Secretary Bessent is doing in terms of announcing the Treasury buyback, is that at least working in tactically? At least we have seen, for example, the 30-year yield come down about 12 basis points since the buyback announcement. So is it doing what it's supposed to be doing, and what's the long-term outlook for this?
Well, short term, it seems as if the strategy is to squeeze out some short traders and send a bit of a shock, if you will, small shocks into the system to try and get people to stop shorting treasuries and so on, for the simple reason that, of course, the US has a material debt, current account fiscal deficit, and an outlook that doesn't look very sustainable. But long term, this can't work. The Treasury, where would it get its money from to do what it needs to do, which is to issue debt? Issue debt to buy debt. Is that a long-term strategy? I don't think so. What they need to do is to introduce some fiscal discipline in the US, which they can't do for political reasons, and we're on this path for years. But I think it's a very bad idea, to be honest, that the Treasury is intervening in the bond market. I think rates policy should be left to the Fed and on the short end, and then the market forces need to figure out what is the right price for US debt at the long end.
Does then perhaps make sense that investors are very much focused on the dollar debasement trade, that the real value of the dollar will actually continue to depreciate given the fiscal backdrop of the United States? And if so, what assets would you be looking at?
Well, that's absolutely the greatest question in the market is what does this do to the dollar? If they are prepared to accept a weaker dollar, then other asset classes will benefit from that. That's for sure. We've always seen that if the dollar starts to weaken again, you see things like gold, Bitcoin, other things that are dollar negative sensitive, as I call it. So you'll probably see also assets in the emerging markets being supported in general by a weaker dollar. But I'm not sure that this is the policy they would wish for. I don't think the US has an interest in a perilously weak US dollar, but markets will put a risk premium on that if they can't sort of get comfortable that the US is on a sustainable fiscal path.
How much of a conundrum is it that we're seeing all of this volatility coming out of the JGB, Japanese government bond space as well, when it comes to real duration volatility? We do have 10-year, 30-year JGB auctions in the next week, and the whole conundrum with the U.S. when it comes to their yields and when it comes to their fiscal picture being really worsened by what's happening here in Japan.
Yeah, absolutely. I mean, the Japanese bond investor, of course, has been very loyal to US Treasuries for decades. Japan has a material savings surplus that it needs to put somewhere. But now that Japan has been faced with the challenge of actually not battling deflation but more inflation, it all goes into reverse. And the US, of course, is highly dependent on the Japanese buying treasuries, and therefore they started intervening also in the yen markets, which I also think is a very bad idea, because that is an even bigger, if you will, market and gorilla to battle with. But the issue that both sides have, quite frankly, is in the face of inflation. How do you stabilize your long yields and the risk premium on that? And therefore, they're locked up in this together. I think probably the US would be wise to wait and see what is the path here in Japan before they start intervening in these things.
Michael Strobaek, really good to have you with us. Global CIO at Lombard, Odier. Haidi?
Shery, let's take a look at some of the movers early on, just about 10 minutes into the start of trading here in Australia. Domino's Pizza is one that we're watching, swinging to a full-year net loss of 134 million Aussie dollars. Revenue declined there. Same-store sales also saw weakness. We're watching Woolworths, the supermarket giant, reporting a full-year profit that narrowly missed estimates, continued pressure on household budgets. It is seeing upside of just about 5.25%. The collectibles campaign featuring Disney Ushi's figurines. If you have a small child, you probably know all about it and the trading activity that goes around that. That helped the food sales part of the business jump at the start of fiscal 2027. WiseTech, we are watching, down by over 5% despite forecasting higher revenue for fiscal 2027. Annual sales surged 79%. The software company citing continued growth in its CargoWise logistics platform. And Lynas Rare Earths is one that we're watching in the metal space. A little bit of a loss there, though, so far in the early part of trading. Full year profit below forecast. Investors are looking for signs of that sustained demand for rare earth materials outside of China. More ahead here in the Asia trade. This is Bloomberg.
This week, Bloomberg is live at the Jackson Hole Economic Symposium. Tom Keene and Lisa Abramowitz, along with Michael McKee, will bring you news and interviews with Fed leaders, policymakers, and economists shaping global monetary policy. Tune in for continuing coverage and a special episode of Surveillance, August 28th at 9 a.m., including full coverage of Kevin Warsh's first speech to the conference. The Jackson Hole Economic Symposium on Bloomberg. Context changes everything.
China is sending a message of defiance to the U.S. over its economic ties with Iran. Hours after the U.S. sanctioned dozens of Chinese entities, the foreign ministry warned that it will take all necessary measures to protect its interests. East Asia government editor John Herskovitz joins us now with the latest. And John, Iran is still China is Iran's largest oil buyer right now, and still Beijing pretty defiant here.
Yeah, exactly. China has a lot of things going for its leverage. First is the economics, as you mentioned. China buys about 90% of Iran's exports of oil, and they can get it at a discount. And China hasn't recognized the U.S. sanctions, unilateral sanctions, and saying it can do business with Iran. And the second thing is security. As the war has been going on, U.S. military assets in Asia have been drawn down. U.S. military aircraft carrier strike group deployed in Asia went to the Middle East. And it's also raised political concerns. Drills between South Korea and the U.S. have been drawn down, and it raises questions among places like Japan, South Korea about the U.S. military commitment. And finally, there are the trade measures that Beijing has in its favor, rare earths and other critical minerals, which the U.S. will need for things like rebuilding its missile supply. So Beijing has a lot going for it now.
Is that a reason why we saw some restrained action from the U.S. when it comes especially to targeting of Chinese banks or refineries? Exactly.
And going after refineries is one thing, but going after banks is a really big measure. It could have implications, or would have implications, for the U.S. dollar system globally if a bank were targeted. And this is one of the reasons why Scott Bessent, when he made the announcement yesterday about the sanctions, about the U.S. Economic measures, didn't mention Chinese banks or refineries specifically. And he had a line there. He didn't want to blow up the global financial system. The U.S. is aware of the risks, and the risks are enormous if they go after a Chinese bank.
The global economic system is already taking a hit from what's happening around the Strait of Hormuz. Are we seeing any progress on that front?
Yeah. Oman and Iran have been continuing their talks. They're moving forward for some sort of interim agreement for shipping through the strait. There's going to be some management, mine clearance, probably tolls. The question is whether the Gulf neighbors will buy into the system or the U.S. will. The U.S. has drawn red lines about tolls in the Gulf, but this may be the only way forward.
Bloomberg East Asia Government Editor John Herskovitz there. Well, U.S. Foreign Service officers who were evacuated due to the Iran war could soon begin heading back to their posts in the Middle East. A New York Times report citing internal documents says the State Department is preparing to send back diplomats as early as this week. It suggests that the Trump administration is not expecting a return to all-out war. Well, Bloomberg has learned that the Trump administration is discussing additional trade actions against Canada following the Hani government's announcement of new tariffs on American imports.
Today I'm announcing that Canada will match the United States tariffs dollar for dollar, rate for rate. Effective September 8, Canada will impose counter tariffs of up to 15, 25, or 50% on $27.6 billion in imports from the United States of America.
Well, let's bring out breaking news editor Matthew James MacArthur, who joins us now for more. So we're seeing well and truly the tit-for-tat situation play out, right? What do we know about these counter tariffs and how will they play out in terms of how Canada's economy is going to manage it?
Yeah, so we've seen this escalate from something that we thought over the weekend might have been actually a deal to the U.S. implementing up to 50% tariffs on certain Canadian goods. The Canada retaliated against that today, and we're hearing some reporting on the Bloomberg side from a White House official that even more could be coming. Now, Trump has already threatened to escalate the tariffs up to 50% starting next year on certain autos. We know this is probably going to be a pretty unpopular thing for certain states like Michigan that are really heavily reliant on autos, and it's going to be a challenge for him and the Republican Party going into the midterm elections. It still is to be determined whether or not this is a negotiating tactic. I know the President of the United States has used certain threats like this to help get other countries to the table. Canada has said, we've heard that they are prepared to outlast the U.S., at least through the midterms, even potentially through the rest of President Trump's term. It's still to be determined exactly what is going to come from the tariffs, economically speaking, and whether or not the countries will be able to outlast that.
You talked about the window for hope closing because by the time this escalated, the language between the two sides was really pretty strong, right? How did we get to this point, and is there broad popular support in Canada for pushing back against the US?
Yeah, that's a great question. I mean, it was a really stark turn of events. We don't have the full story. Canada has said that the U.S. made some extra demands sort of toward the end of the negotiation. Bloomberg reporting has said that Commerce Secretary Howard Lutnick thought that the agreement the U.S. had with Canada was a little too generous. So we're not exactly sure how it escalated to the point where there's this tit-for-tat trade war. We even had on the Ontario Premier Doug Ford on Bloomberg earlier saying that he wants to bring the language down and negotiate policy rather than just exchanging barbs. So we're not sure exactly how it got to this point or what the off-ramp is, who's going to blink first, so to speak.
Matthew James MacArthur there, our Bloomberg Breaking News editor. More ahead here in the Asia Trade. This is Bloomberg. Anthropic is reportedly expected to tell investors its potential revenue opportunities exceed $30 trillion, topping the estimate for SpaceX. According to the Wall Street Journal, the company is aiming to raise as much as $100 billion in its IPO, aiming for a valuation of about $2 trillion. Bloomberg's markets reporter Anthony Stevens here is to go through really these eye-watering numbers that we're now talking about.
Yeah, SpaceX drew some gasps when it came out at that 28 kind of trillion number, and now we're in the 30 trillion. And this speaks to how the total addressable market around AI is going to be defined, right? And that's going to be battled over going into any prospective IPO. So how Anthropic has chosen to define the market for AI is all use cases that can be addressed with AI. Now, that is contentious because thus far, Anthropic's use case has primarily been in the software industry, where usage of Anthropic tools is very prevalent around the technology-focused business side as well. It's very commonly used. But on broader spectrum industrial users, you don't see that going by any common tracking, right? People do use AI, but are they paying for it in a subscription format or in a per token format? Now, that is a very interesting divergence when you try to decide what the total addressable market is. But it continues Silicon Valley's aggressive usage of the total addressable market in getting to IPO valuations. Now, you have some validation of that from the SpaceX IPO, right? There was a follow-through. The share price was more or less trading where it IPO'd. So there is some level of belief in this total addressable market as a growth opportunity from the current usage of AI. Now, obviously, the sky is the limit in as far as the company communication is concerned, but there's really an open scientific question about how much this can grow.
What are we hearing in terms of this new chip news from OpenAI?
It's sort of related to this total addressable market, right? A lot of these hyperscalers and LLMs are building out their own chips because they think the demand for compute is so strong that it cannot be addressed by existing players in an efficient manner. Bear in mind that Nvidia's GPUs were initially designed as general purpose processing, right? They have a DNA from the graphics processing units. So now we have this huge kind of trend where LLMs and hyperscalers are building very specific models to help chip models to help inference using its custom technology. And that is becoming a much bigger trend going forward. So, for example, OpenAI addresses the speed issue with inference. It addresses the power usage issue. And it also addresses the fact that this chip can be used across LLMs. So they've also tested it with Chinese models. And that really struck me as something quite interesting. Also, AI was used to design this AI chip.
Bloomberg Markets reporter Anthony Stevens there with the latest on the broader markets. As we follow these other top corporate stories, OpenAI now saying that Chris Malone, an executive helping oversee its data center build-out, has left the company. His exit adds to a series of executive shuffles and departures in recent months. Longtime executive Brad Lightcap has announced plans to leave for a new project, and the ChatGPT maker just named its second new chief revenue officer in less than a year. Bloomberg's been told that Alibaba co-founder Jack Ma has joined senior executives investing in company stock to show support for its AI ambitions. A source says Ma bought almost $77 million worth of shares in recent days. He joins Chairman Joe Tsai and CEO Eddie Wu, who have acquired at least $20 million of stock, according to exchange filings. We have more ahead on the Asia trade. This is Bloomberg. Brent is now below $87 a barrel. We're talking about the lowest levels in more than 2 weeks. We're seeing momentum when it comes to diplomacy around the Strait of Hormuz. Iran and Oman discussing a temporary maritime corridor and clearing of mines in that waterway, sending WTI also lower towards that $80 a barrel level. We're seeing a little bit of downside when it comes to the price of gold, but this is after 5 days of gains already. We had seen the metal gaining more than 7% in the last week. This, as we saw the Treasury in the U.S. ramping up buybacks of long-dated government debt. So we saw that price supported, but this downside also perhaps signaling a little bit more volatility in the metal, because we saw that sharp decline in gold prices in the first half, weighing on profits for a lot of companies, including Laopu Gold. Falling demand forced the luxury retailer to step up promotions to attract shoppers. Asia Stocks reporter Jeannie Yu joins us with more from Hong Kong. Jeannie, how much of the downside on this company was just the gold price cycle, and how much just weakness from this company itself?
Yes, I think it's very interesting that you point out like gold price drop is one of the major reasons, but we need to look at one is the weak macro environment in China, which have turned all the shoppers to become very, very price sensitive. And I think the strategy Laopu has is kind of targeting some luxury spending, higher end, consumption, and which turns into kind of like a trouble for them, especially when gold prices are surging and then the marketing expenses are on the rise. So which is pressuring both its revenue and profit margin, which is not a good sign for Laopu Gold.
Not to mention that really positioning yourself as luxury with a lot of discounts could actually hurt the brand, right? What are its competitors doing?
Yes, I think for Laopu, the case is like they're trying to do a lot of promotions. For example, collaborating with some e-commerce platforms like Baba, Tmall in the first half, but the sales trends still got really, really hurt by the weak consumption environment in China. I think that's one of the issues, not just Laopu is struggling with, but because Laopu has those high-end, kind of branding strategy, they're getting even more impacted in this kind of environment. I think that's one specific thing about Laopu.
The stocks reporter, Jeannie Yu there. Well, China's luxury consumers, I should say, are turning to used goods as the economy struggles and job prospects remain weak. Our Bloomberg opinion columnist Juliana Liu believes that it's time that big brands embrace the second-hand market boom. Juliana joins us for more from Hong Kong. So how active are luxury brands in the second-hand market?
Well, on the whole, they are not really at all. So the only exception really is Rolex and Ferrari. They both have so-called certified pre-owned programs where they authenticate and service their products. They don't actively participate in the resale of their own products. So what I'm arguing is that I think many more luxury houses should be doing something similar, especially in China. Now, this is a market where for 20 years things were booming. It was unprecedented. We've never seen that kind of growth in luxury before, and we're not going to see it again. But that said, it's not as if Chinese shoppers have lost their fondness for luxury. They still love luxury products. It's just that their budgets have shrunk. And this happened essentially after the popping of the property bubble. So what I'm arguing is that luxury brands should lean into secondhand as a way of recruiting future customers that when their incomes rise or perhaps when this property mess resolves itself, they will have budgets similar to what they had before. So this is not something that we're seeing happening in China, but this is something I think should be happening.
I suppose the question is if it's going to make a difference to their earnings.
Yeah, so I don't think it's going to make an immediate difference. But that said, these brands do lots of things to recruit new customers. We saw LVMH opening that huge ship-shaped pop-up store in Shanghai. That did extremely well, and they did that essentially as a marketing exercise to, again, recruit people into the brand. And Chanel, for example, opened a shoe boutique in a fancy shopping mall not too far from us in Central IFC, selling shoes, again, as a way of recruiting people into the brand. So I think they should be adding secondhand into this overall strategy.
Bloomberg opinion columnist Juliana Liu there. Let's take a look at some of the top global headlines that we're following this hour. And the White House says it will take as many as 200,000 visas away from foreigners in what it calls the largest mass revocation in U.S. history. The move is expected to target asylum seekers who hold visas, escalating President Trump's drive to cut the number of foreign citizens living in the U.S. Data showing federal immigration agencies have a backlog of more than 3 million asylum cases. Indian technology companies may have become less reliant on high-skilled visas amid tighter restrictions under the Trump administration. IT industry group NASSCOM says employment under the H-1B visa program has fallen significantly as Indian companies expanded local hiring. On Monday, the US proposed a new rule requiring firms to pay around $103,000 for most H-1B workers hired by private employers.
And Heidi, still ahead, we head live to the Asia Science and Technology Innovation Enterprises Going Global Summit in Hong Kong. More with the MindRank AI founder and CEO Zhangming on how AI is accelerating drug discovery. This is Bloomberg.
Take a look at what we're watching as we're just about 40 minutes into the start of trading across the major markets this midway through the week session, and it is a mix of issues for investors to really contend with, from of course looking ahead to Nvidia numbers to the geopolitics and trade war with Canada now matching the Trump tariffs with a 50% tax on US dairy and steel. We're also seeing earnings coming from the likes of Australia here as well. The Nikkei 225 down by just about softer than 0.5% there. The Kospi, though, very, very modest gains as we kind of gear up for those Nvidia numbers, and Australian equities off those session highs, but still higher by about 0.25%. A whole lot of earnings flow coming through from there as well. Well, Hong Kong is hosting a new forum aimed at helping Asian tech companies evolve from regional champions into global players. The platform connects startups with key stakeholders across government, capital and industry, providing a gateway into international growth and collaboration. Let's get over to the event. Our China correspondent Min Lo is with our next guest.
Hey Heidi, it's great to be here with the CEO and founder of MindRank AI, Dr. Zhangming. This is an AI-first biotech firm that uses AI to drive drug discovery. So, Dr. Zhang, thank you for joining us. For people who are not so familiar, tell us a little bit more about your proprietary AI drug discovery platform. How is it a game changer in the pharma sector?
Yes, so traditionally the drug discovery and development has been a trial and error process. So by leveraging the power of AI, now the process has shifted from a trial and error towards more predictive and more capital efficiency and faster process.
And you have mentioned that I think it reduces your costs by about 60% or so. Where exactly is the cost reduction coming from?
The majority of the cost reduction from the preclinical stage, but now we see a lot of advances in the clinical stage as well. For example, from the target discovery, the biological understanding to move from the molecule design, which is the chemical related. So we utilize some multi-parameter optimization strategy and algorithms instead of the traditionally, the human in the loop.
And I understand that it shortens the timeline of the drug development process quite a bit.
Yes, indeed. So humbly speaking, yeah, we can reduce by half of the time, and also probably 10 times for the preclinical, the capital efficiency. Yeah.
So one of your key assets right now, as far as I understand, is a weight loss drug that is in phase 3 clinical trials, aiming to launch in 2028, 2029. But there are so many well-established brands like Eli Lilly that already have existing weight loss drugs. How are you going to wrestle market share from them?
Yes, indeed. So yeah, we do have a small molecule, GLP-1 antagonist, and so basically we see a very differentiated profile in the clinical trials. So we expect it to launch in the 4th or 5th in the Chinese market, and we see very obvious weight reduction, efficacy, and also safety profile. So our drop-off rate in phase 2B study was only less than 1%.
So very low drop-off rate. What is your pricing point going to be like? What is your distribution channel and your path to commercialization?
Yeah, so for the commercialization and also manufacturing, actually we are relying on very experienced public partners. So that's not the strength of MindRank at the current stage. Yeah.
So as far as I know, you're still a loss-making company at this point. Realistically, when can you reach profitability? How long would it take?
Yeah, we are very focused on the capital efficiency, but we don't have a very clear, goal to reach the profitable, because now we are still pre-revenue stage, and after the launch of the drug, the first blockbuster drug in 2028 to 2029, we can expect a huge revenue income per year. But yeah, probably after another few years, when we become a biopharma company, we can have a clear, milestone or timeline.
What is your revenue projection for your blockbuster drug?
In the mainland China, we expect to reach several billion per year RMB. Yeah.
And again, there are a lot of existing drugs, not just from the international companies like Eli Lilly, but the local companies like Hormuz, for example. I know they're also developing their weight loss drugs. How are you going to secure your market share?
Yeah, so basically we aim to produce the safe and efficacy profile, and also since it's an oral small molecule, so the major competitors, they have injectables, so it means we are easy to carry, and also from the safety-wise profile, we have a very low GI adverse events happen, and also from the, for example, liver-related and metabolic advantages, we see a very clear differentiation, and that's come actually from the very differentiated, the biological, the design.
Yeah. And I know that you were part of the Nvidia Startup Accelerator program many years ago, before the US export controls come into place. And I believe you were using Nvidia's chips and its architecture as well. But since the export controls came in, has that impacted your compute capacity or your ability to access their hardware, for example?
That's give us some influence, for sure. So traditionally we have built a small we call it cloud computing by ourselves. So that's located in our Hangzhou office. And after that, when we want to expand to a larger scale of computation powers, we're relying more on our partners such as Amazon or Alibaba, their cloud computing cluster. So which means that's more expensive.
So it's more expensive. Does it affect the capacity or the efficiency of the compute?
Indeed. So because we're relying on third party instead of our proprietary pipeline, so from the data security and also from the overall solution, we need to take more care, of that process by ourselves.
As part of that Nvidia Startup Accelerator program, what was the relationship at the time? Was Nvidia invested or supporting you in any other way besides offering the technology? And how has that relationship evolved given the broader geopolitical environment now?
In 2023 and 2024, we have some close discussion with Nvidia team in China and the States, and we talk about certain opportunities. But since the tension between Chinese and U.S. government, I think that has shifting.
That has shifted.
Shifting away.
So in that case, are you looking to pivot elsewhere? Are you looking for alternative investors? How are you dealing with this sort of fallout in the geopolitical front?
Yes, for the funding perspective, so our main investors, they are from the healthcare sector, and we are planning to be in the pre-IPO stage recently, so we are gonna meet a lot of internet or TMT investors.
Are these mostly Chinese capital, or how much interest are you getting from international investors, and what is your timeline to the IPO?
We see the IPO is very natural when we reach the next milestones, which is the big deal for the GLP-1 small molecule, and also other BDs when that happens.
Do you have a guidance of a timeline that we can expect?
Probably next year.
Okay. You are actually still a very lean company. I believe you have 50 employees, and yet you have already quite a large pipeline of drugs in development. Can you tell us about what else are you pouring research into? What else is closest to commercialization now?
So apart from the metabolic disease space, we are very focused on we are very interested in the CNS space, which is longevity space. So in 2023, we are in the consortium which is funded by TMS from Singapore and the US government. So we study anti-aging and discover the new biological findings to try to intervene the CNS disease. And apart from that, we are develop the novel platform that not only to target the protein targets, which is small molecules and also antibody and other modalities such as siRNA drugs.
And aside from developing your own drugs, I wonder, are you getting interest from other drug companies to license your proprietary drug discovery software? It's called MAP, right? Are you getting interest to license and maybe co-develop drugs with you?
Yes, for the medicine, we do have some under CDA discussions, and we expect that to happen in 12 months. We will have some BD, recently. But apart from the platform, we've been partnering with a few public companies, including Merck from the States, and also a lot of public companies in China and Hong Kong.
So your key asset right now, the weight loss drug that you're about to launch in China in a few years' time, do you have plans to sell that overseas as well? And has there been challenges in getting the regulatory approval and the certifications? What's the progress?
The first generation of the drugs, the single targeted GLP-1, we are about to launch it in a few years. But we are also developing the franchise, the portfolio of the obesity and type 2D drugs. So we expect to have some novel new drugs to launch or to be BD licensed to partner with our partners. In a few years.
International partners as well. All right. Thank you so much. That was Dr. Zhangming, the CEO of MindRank AI.
Meanwhile, there in Hong Kong. We have more from the Going Global Summit ahead on the China Show. We'll have exclusive conversations with the leaders of 00 Robotics and Longshin Avionics as well. And we have breaking news out of the U.S. Incumbent Darlene Graham is projected to win the Republican Senate primary in South Carolina. This is according to Decision Desk HQ. Now, she's the sister of the late Senator Lindsey Graham, and Republicans were choosing this new Senate nominee in a closely watched test of President Trump's influence. You can see there live pictures of South Carolina, and President Trump backed Senator Darlene Graham over Ralph Norman in that runoff to replace her late brother on the November 3rd general election ballot. We have more ahead. This is Bloomberg. OpenAI says its new in-house chip outperformed Nvidia's current flagship processor in key tests, measuring efficiency and response speed. The company's chip chief, Richard Ho, told us the goal is to deliver more intelligence to users at lower costs.
The benchmarks that we did were with an open source kind of benchmark called InferenceX. And we did that because it was a fair, kind of neutral benchmarking method. What we're seeing with Jalapeno is that we're able to get both high throughput and low latency with the same device, which is a kind of a first in the industry. And why does this matter is because high throughput means that you can serve a lot of customers with a lot of tokens much cheaper than you could if you otherwise. Low latency gives you very fast response times. And so, the agents will come back faster, you can do, more coding quicker, and that really, I think, is a real benefit for our products.
This is it. This is Jalapeno. You very graciously allowed me to get my hands on it. And again, the whole emphasis is on throughput and ultra low latency. This is an inference chip.
It is.
So very simply, why focus on inference, not on the training side with your custom silicon program?
Well, I think that if you look at it, right, OpenAI has this enormous need of compute. And where that growth of compute is really on the inference side. We need a lot of training, and we have a really strong partner in Nvidia who has, really got a great training chip. So we focused on where we thought we needed to increase the amount of compute that OpenAI has available. With the growth in our users, with our weekly active users growing very, very fast, we saw the need to continue to have a wide range of inference products, and this is going to be part of our fleet along with our existing partners who are providing us other chips.
How do you decide which workload goes to Jalapeno versus Nvidia or Cerebras, for example? You have options, but how do you make that decision?
It's a great question, right? I think with this optionality that we're now creating for the company, I think that we will be able to provide users with a range of models that have different cost benefits and different latency capabilities. We will map that ourselves. We will map out which product, which SKU, which chip is best for which one of these models. But the whole goal of this is to deliver more intelligence to our users at a lower inference cost, at a lower infrastructure cost. And that's what this is part of that entire strategy that we've been working on for a while now, right?
Lots of people struggle with the benchmarks. To the layperson, it's difficult to decipher. So in very simple terms, on a dollar per token basis, how does Jalapeno stack up against the other options that are out there? How has this changed the economics for you?
It should drop it. It's a really good chip. It should drop it by a lot. The performance per watt that we're seeing, which is a good proxy for how much token will cost, is somewhere in the region between 1.8 to 4x better than other existing chips right now. And so we should see that ultimately when this rolls out into production, customer token prices should come down. That's a big drive that we've had at OpenAI for a little while now. And this really is part of that strategy.
OpenAI chip chief Richard Ho there speaking to our Bloomberg tech anchor Ed Ludlow. Let's take a look how we're setting up when it comes to the start of trading across Greater China in the next hour. And this as we have kind of a pretty solid session here in Asia. Of course, a little bit of sort of sideline action as we wait for those Nvidia numbers. We've got inflation numbers out of Australia as well that are on watch. But US stock futures are taking a little bit of a dip as oil declining there as well. But we are looking like some upside as we get into the start of trading across Greater China. Hong Kong tech futures up by just about 0.8%. Pretty flat being indicated for the start of trading in Taiwan, but A50 China futures also seeing some modest upside there. That is just about it for the Asia trade. Our markets coverage continues. We're looking ahead to the start of trading in Hong Kong, Shanghai and Shenzhen. The China Show is next. This is Bloomberg.